And welcome back here to Live Now from Fox. I'm Andrew Kraft. It's been quite a busy Tuesday. We're moving quite along here, though, on some of these top headlines, including some of these main business headlines as well. I want to put up this tweet here. Take a look at this at Axios there with the headline, the news we brought you yesterday, that Red Lobster has filed for Chapter 11 protection. It's one of the largest restaurant bankruptcies in recent years here. And so you can see some of this video as well. It's the largest seafood chain. It became popular for its Cheddar Bay Biscuits and endless shrimp deals, filing for Chapter 11. The company cited several financial and operational challenges for the move, saying that more than 500 restaurants across the U.S. and Canada are expected to remain open. So that's good news here. So we want to talk about the significance of this story. If you are a regular customer of the seafood chain, what does it mean for you? Let's do that right now with Axios reporter Richard Collings. He joins me. Richard, thanks for being with us here. I know you've been following this story so closely. This is the largest restaurant Chapter 11 bankruptcy we've seen in some time. Why?
The restaurant business has really bounced back from the pandemic, and I think a lot of bankruptcies have been delayed. I think we're going to start seeing a lot more of this sort of thing, though, going forward. So it'll be interesting to watch.
Yeah, of course. You know, talk about the business model, maybe. I mean, were there signs? Were there alarm bells? Was the writing on the wall, so to speak, in the run-up to this, do you think?
Yeah, honestly, Red Lobster's problems go back many years. I think anytime you're talking about one of these storied brands that have been around for decades, you usually find the issues start many, many years before the actual event takes place. So when Darden Restaurants used to own Red Lobster, it chose to sold it back in 2014. It was already in decline. Then same-store sales were down in 2013. It ended up selling the chain to Golden Gate. I think that's pretty significant already when you think about that a restaurant operator who should know better than anybody how to run this business, how to turn it around, actually chooses to sell it instead. So there were problems then.
Okay, so Red Lobster touts this all the time, of course. Their endless seafood promotions. You don't think that was at play here? I mean, could you trace it back to some of these, endless shrimp promotions that they market so often here to its downfall, or no?
What ended up causing Red Lobster's bankruptcy, there were a lot of reasons for it. Endless shrimp was just the latest in a series of missteps by the company. Really what happened was Darden, before it sold, it really wasn't reinvesting in the business. It wasn't refreshing the locations, it wasn't refreshing the menu, and it wasn't refreshing the marketing. And the restaurant business is one of the toughest there is. So you have to constantly be doing all those things in order to stay competitive with other folks. And if you even take, your foot off the pedal for even a little while, you can fall behind very quickly. And then you add to that, the need for these companies to invest digitally in their operations. And that basically caused Red Lobster to be sold to Golden Gate, the private equity firm. And then Golden Gate came in and does what a lot of private equity firms, they put debt on the balance sheet, they monetize assets. And of course, that didn't help a company already on the decline.
Yeah, I was reading about how they're going to, come out of this. One of the plans announced yesterday was they're going to set up this own entity, and it's going to be comprised of their lenders and creditors, and they're going to sell assets to this new entity here. So I thought that was somewhat of a novel and creative way to get themselves out of this mess. Do you think that is attributable to the fact that so many of the restaurants get to stay open during the Chapter 11 process?
Well, essentially what's happening here is the creditors are forming a group. The stalking horse bid basically serves as a floor. They're probably hoping that someone else comes in with a higher offer, but if someone doesn't, they'll be ready to take the keys to the company and try to run it themselves for a little while. The effort there is really to get the best recovery they can on their money. So they've lent, in many cases, they've lent Red Lobster a lot of money. So they're trying to get as much of that money back. And honestly, the best hope for them is to try to reorganize this and hopefully by reducing debt, getting rid of a lot of bad locations, they can whip it back into shape.
Yeah, and I mean, the announcement that, they're going to keep a lot of the restaurants open also came in conjunction with the fact last week they did close about a dozen locations and kind of auctioned off some of the assets within those very specific locations here. But is this just a way for Red Lobster to say they've stanched the bleeding, or are they delaying the inevitable here, if not for some outside large investor?
These things are tricky. Sometimes they work and sometimes they don't. It's always surprising to me what companies are able to turn themselves around and what companies end up back in bankruptcy not that long after what we call a Chapter 22. And so it's uncertain. So, again, the brand has been in decline for some time. They offered promotions like endless shrimp to try to get customers back in the door. But those kind of things only work if you have the restaurant, the experiences, the food in place that's going to get people to start coming back again. So it's going to be a tough turnaround, and it'll be interesting to watch and see what they do with it.
All right, Richard Collings with Axios. Appreciate your time tonight. Thanks so much.